Good morning from the For the CME. This is Chris Robinson with your Traders Exclusive comment here today, the 5th, the first Wednesday of the month. We're going to talk about corn, wheat, and beans, livestock very quickly, and then I got to hop. Corn, wheat, and beans. We've had a good rally off the lows. We had about a 40-cent rally in soybeans. Corn had about a 35-cent rally, went from 15 all the way up to 50. We still have not been able to breach the 350 level. That's a big psychological level. I think there's a lot of farmers out there that want to sell it at 350. If we were to pop through there, there's another level of resistance on the charts at 355. And then, of course, the 100-day moving average is up there at 365. I continue to watch that. We are 1 week away from another USDA WASDE report. That's a worldwide supply and demand. We'll get supply and demand not only for the U.S., but for the rest of the world. We'll also get an update on crop production, which right now we're looking at a very large crop. Just came out with some private forecasters this week, and they're above 174 for their corn yield, and they're above 52 for the soybean yield. Those are numbers to watch. We're heading into the teeth of harvest. I would be careful about getting too bearish or too bullish. I've seen these markets move. You get a very, very, very bearish amount of information, and then the market rallies and can rip your head off for your opinion. This can be a difficult time of year to trade grains if you're not careful. I would get positioned for that report a week from today. Again, we've had a good rally. Are we going to extend it? Some people think we may. I would continue to watch the 100-day moving average, both in corn and in soybeans. November soybeans dancing around that 973 level. I would watch that moving forward. Moving over to the wheat, we've got a little bit of a short covering rally. The managed funds are still short record amount of wheat, about 130,000 contracts of wheat. They're short about 170,000 contracts of corn. If we were to get some engine to make them want to cover those shorts, then we could get a violent short covering rally. They still are long about 60,000 contracts of soybeans, which in the grand scheme of things is not a lot. Earlier this summer, they have been long 200,000 contracts. So I would continue to watch those commitment to traders that come out on Friday. Livestock, there's not much to say about livestock. We are at multi-year lows for both cattle and lean hogs. Lean hogs at 7-year low. I would say this, kind of a reverse indicator. You're starting to hear more and more stories in the national press about how low the price of hogs are. Typically, when that starts getting out there into the general news, when they start talking about it on the cover of the Wall Street Journal, or they start talking about it in your local paper, it may be time for a cleansing rally to squeeze out the shorts. Because by the time somebody who has nothing to do with livestock trading at all, by the time they want to get in on something, usually it's a reverse indicator. I would watch that moving forward carefully. Doesn't mean to say we can't go lower. I would just say that when the whole world is interested in finally selling hogs, you can get a situation where the boat gets tipped too far one way, and then they may be right, but they'll get run out of their position on their stops on a short covering rally. So look for that type of volatility moving forward. We are going to have a Friday unemployment number that could move the U.S. dollar moving a little bit further. That may impact commodities, but right now the main story continues to be we're in the teeth of harvest, and we're going to have a very large corn and soybean crop. This is Chris Robinson. If you're looking for help with your trading or your hedging, give me a call. I'm on the web.